So the tariffs have been impactful to the market in that they have really created a lot of unrest in the minds of folks. So the tariffs themselves can impact inflation, and we've already had an ongoing inflation issue that has precluded the Federal Reserve from decreasing rates. So the first part is just the uncertainty as it relates to inflation and tariffs. The second part is as it relates to GDP. So if other countries maybe are slowing down their consumption of U.S. goods, if it becomes more difficult for people to buy things here, that can be impactful to our GDP, i.e. a recession. There's another contingency and another issue that relates to unemployment. So there are many companies and many people that strictly deal with importing their product from China. And for those companies, there's going to be lots of potential layoffs. So that's another contributing factor. So tariffs are really difficult because they're very wide ranging of impact. We haven't had these significant tariffs in a long time. So most people are just guessing. Most folks do not know the full impact of each and every element of these tariffs. The sectors that have been hit the hardest from tariffs are technology has taken one on the chin, and probably less so than sector specific. It's really business specific. So for example, technology has gotten beaten up because a lot of their products, Apple iPhones and iPads and NVIDIA's microchip, those sorts of companies gotten really impacted as a result of tariffs because they have to import and export a great deal of these things. So some of the sectors that may not have gotten hit quite as hard would be real estate. Maybe small cap stocks have not gotten quite as impacted. Import, export, manufacturing companies have gotten beaten up pretty badly. The airline stocks have gotten beaten up pretty badly. Mostly companies that are extraordinarily multinational in nature are the ones that have gotten impacted. So think, KKR as an example, the private equity company that has businesses all across the globe has gotten severely impacted. Nike, Lululemon, they're importing a lot of their stuff from Southeast Asia. So I'd probably say it's less sector specific and more company specific. What's the nature of this company? What are they doing? Companies that might not have gotten impacted quite as much. Another example might be service-based businesses, maybe accounting firms, law firms, things like that. Maybe if they don't have a international contingency, they've probably done just fine. So I think the market reaction is predominantly short-term in nature. And very often this is what we see. You see the news headlines come out and you have people that automatically are very, very fearful and think the worst of a scenario. So by and large, these tariffs are probably going to impact the economy by a $500, $600, $700 billion per year, which is a tremendous figure. But the total sell-off across the globe before a recovery was probably close to $10 trillion in market capitalization. So those two things seem disjointed with one another. I think the market has the propensity to overreact to all sorts of headlines, good and bad, by the way. So I think that this has the potential to be rather short-term in nature. This is very man-made. I guess at the end of the day, the duration of this instability will be dependent on how quickly we get deals, how quickly we get resolution to a lot of these things. Yeah, surprisingly, lots of the international stocks, lots of the international consumers or markets have actually done pretty well. I think that's probably a temporary reprieve. I don't think that if the tariffs continued and we didn't have these 90-day sanction relief and we actually saw pretty widespread tariffs, I don't think many of the global economies would withstand it. So the difference is how are markets reacting versus how economies reacting. So the stock market actually was doing okay, but I think if the tariffs continued any longer, that the economies would really start to suffer. So in time, the market would. These are two different concepts. People often equate those to one another, but they can be very incongruent with one another depending on what's going on. So surprisingly, things have actually stayed on pretty firmly across the globe. But had we continued, I suspect that wouldn't be the case. So tariff-resistant investments, we talked about some of these earlier in the video. It's going to be companies that don't have a tremendous degree of international exposure. Small caps might be a pretty good place to be. They maybe don't import quite as much. Maybe they don't export quite as much because they're smaller companies. Perhaps service businesses would be pretty resilient, especially those that are really only focused in on the U.S. consumer, the U.S. product, the U.S. government. Those might be ones that are a bit improved. So real estate might be another place, but even real estate, we don't know the full impacts. If interest rates stay high as a result of tariffs, in real estate will suffer. And so we really don't know the full impact of things. We don't really know how deep tariffs would go into the US economy, the global economy. So probably just being more defensive in nature, companies that cash flow consistently, that have American consumers as their primary target, that aren't importing things. So there's probably some red flags to definitely avoid that we've articulated, but potentially there are not many places to hide a full-blown tariff recession.